Hello traders, today is March 6th, 2025, and we are looking at a chart of MSTX. If you haven't watched my other two videos on this trade, I would suggest you stop and watch those now. This would be the first one. This is on my channel. This is the second update, and I will link those in the description below. So MSTX is a 2x leveraged ETF of MicroStrategy's, symbol MSTR, and I got into this trade a few weeks ago, and since then, since the last update, which was Valentine's Day, this thing has really taken a tumble and it's starting to try to come back. So we got the daily chart up here. The last update I did would have been on February 14th on this candle right here, and I thought things were looking pretty good. We were trading in the low 40s. I had some premium sold, and then we've just been on this waterfall where we were actually down under, I think, $19 a share. So let's take a look at my spreadsheet, and I'll get you up to date on where I'm at here. So I actually got assigned on that 35 put that I was talking about in the last video, which gave me 200 shares. And then on the 25th, I just bought 100 at $23.50. And I had also sold some more puts with Feb 28th expiry, and I got assigned on both of those. I was trying to roll these down or roll these down and out, but I waited too long, and the bid-ask spread was just so wide I couldn't do anything with it, and I elected just to take assignment and see where I could go from here. If we could get a rally, I thought I could sell some call premium. So let's go into the 15-minute chart for this week. Okay, this is my flex grid, and up here is the 15-minute chart. Let's just maximize that sell. So what I've done so far this week, this would have been March 3rd, and you can see we had a nice gap up, and then we just tanked. I sold a $22 put on Monday that expires March 7th. I got $1.20 for it. So on Tuesday, look, we had this nice rally. Tuesday, I sold a couple of calls. Wednesday, we again had a nice rally. I sold a couple of more calls. And then this morning, this is today, we gapped down. We had a nice run up to nearly $36. So I sold my last call, and I did all the call selling for March 14th expiration. So let's go take a look at my position on the chart, and we'll look at my spreadsheet. Okay, so I brought up my position on the current chart, and let's zoom in on this a little bit. So the green bullet over here is my 500 shares with an average price of $32.10, and these red bullets are all the calls that I'm short. So let's take a look now over at my spreadsheet. All right, so here we are. This is the current activity. You can see on the 3rd I sold the 22 put. And then the first two calls I sold on Tuesday the 4th were 44 and 44.50. Got 75 and 80 cents. I was pretty happy with that. And then on Wednesday the 5th, I sold a couple of more calls, and you'll notice I'm laddering up in strike prices. I got the 48.50 and the 51, and I got 75 cents each for those. And then in this morning's rally, I sold the 52.50 call for 80 cents. So on the trade so far, I've taken in just under $1,400 of premium, and you can see over here where my average cost section of this is that my cost on the shares is $32.10, but my net cost less premium sold is $39.32. So I'm sitting pretty good here, and I want to tell you why I did these strike prices on the call side way up higher than the share price was. I'll direct your attention over here to this column. So, for example, when I sold the 44 call on Tuesday, the stock price was $29.05. That next call I sold when the stock price was $29.83, and there's a reason why I did that. So let's go back over to the chart. I wanted to sell premium, and I wanted to get around 70 to 80 cents for each call, and I wanted to give myself the chance to get called away quite a bit over my average cost if MicroStrategy's and MSTX would have a nice run. So I think I achieved that because I got the premium I wanted, and I've sold strike prices $12 and higher over my average cost. These trades all expire March 14th, so there will be some good theta decay. Unless we really rip, then the options are going to gain value, but that's okay because I am more than happy to be called away at each one of those strike prices. This is the March 7th chain, and you can see even up here at 44 now, there's just nothing much going on. A lot of zero bids, 15-20 cent offers, but if we jump out to March 14th and scroll down, you can see most of my positions need to add some more strikes. Have to add some more strikes. Okay, here we go. So, I mean, the 44s right now have gained quite a bit of value, but I sold those 44s when the share price was lower. And the 45.50s, they've also gained value. Here's the 48.5. That's probably about where I sold it. I think I got 75 cents. And, of course, this 51 has decreased in value. Actually, I've got a 50 bring in some more strikes. Oh, here we are. Here's our last one. Here's the 52.50. So, as I said, I'm repeating myself, but I'm more than happy to get my shares taken at 44, 44, or 45.50, whatever. This gives me some good premium. It's not that long of a hold. It's a little bit more than a week. So, what would I like to see happen next? Well, ideally, I'd like to see MSTX close about 43.50 on March 14th. Let all those calls expire worthless, and then we can look out to March 21st and beyond and sell more premium. So I didn't think I would make an update until I had something to report. I've taken quite a bit of action on this trade. I'm happy with the premium I brought in. I'm pretty happy with where my cost is. So until next time, thanks for watching. Hit the like and subscribe button, and great trading, everyone.